Groupon has become one of the most hotly debated upcoming IPOs in Silicon Valley since Chairman Eric Lefkofsky broke quiet period rules by telling Bloomberg West the company will be, quote, wildly profitable. Its latest filing is being scrutinized for a bizarre accounting metric called ACSOI, or Adjusted Consolidated Segment Operating Income. Now, the blog All Things D is reporting Groupon will exclude that metric in an amended filing. But that's not Groupon's only accounting issue, according to Rocky Agrawal, a blogger and tech consultant who's been closely following the daily deals business. He joins us live now here from Vail, Colorado. Welcome back, Rocky. First of all, you describe ACSOI as, quote, the best possible way to view our business if you ignore all the things that make our business look terrible. If Groupon drops this metric, is that at least a step in the right direction?
That's a step, but it's a very, very small step. There are many things that I have issues with in terms of how Groupon is doing their accounting. And I just want to be clear that I'm not saying that Groupon is doing anything wrong from an accounting standpoint. I'm just trying to focus on what are the numbers that really matter to investors. And I don't think the current S1 or even the amended S1 really highlight the numbers that investors should most care about.
So what is the number that investors should most care about?
So one of the big things is the amount of liability Groupon has on its books with respect to gift cards. It looks increasingly likely that Groupons will be treated as gift cards. And if you are a traditional retailer like Target, if you look at their 10K, you'll see that they have $422 million in gift cards outstanding. Typically, the way it works is that if you buy a $50 gift card from Target, they record that as a liability, and only when you actually buy something with that gift card do they recognize the revenue. That's not how Groupon works. Groupon, as soon as you buy a Groupon, they record the entire amount of that transaction as revenue. And that to me is not the right way to do it. And they are having a lot of liability that they're not showing anywhere on their books.
So exactly how much liability does Groupon have that's not on its books? You're saying $300 to $500 million?
Absolutely. And that's based on just looking at how many Groupons they have sold and typical redemption rates of those Groupons. The scary thing about this for investors is that nobody, not even Groupon, knows how many outstanding Groupons there are. Nobody knows how big this liability is. And as states get more and more into looking at the details of Groupon and treating it as a gift card, some states, for example, California, doesn't allow gift cards to expire. So that liability will only grow over time, and that liability is indefinite.
Now, Rocky, put this in perspective for us. You say in your latest post that if PayPal booked revenue like Groupon, it would have $28.7 billion rather than just about $1 billion in revenue. If eBay did the same thing, it would have almost $17 billion in revenue as opposed to $1.7 billion in revenue. What do you mean by that?
Well, that's another problem that I have with the way Groupon is doing accounting. So if you buy a $50 Groupon and you pay $25 for it, the merchant typically gets $12.50. The way Groupon is booking revenue, they're counting the entire $25 as revenue for Groupon. And if you look at the way other companies that do similar things like eBay and PayPal, they only count as revenue the piece that they get to keep. Amazon, the same way. If you use Amazon marketplaces, they only count as revenue the piece that they get to keep. And the reason this matters is that it's extremely easy for somebody to manipulate top-line revenue. So if I were Groupon, hypothetically, and I wanted to increase revenue by $100 million, what I could do is go out and say,
okay,
I'm going to...
Rocky,
I'm going to sell...
So just to clarify, are you saying that Groupon is doing something illegal here, or is this just concerning? Quickly.
It's concerning because it's so easy to manipulate.
Okay. All right. Rocky Agrawal, tech blogger and consultant, thank you for joining us there from Vail, Colorado.